will check with the ngài về mặt của nhà. Action I will
So this is Facebook Live. Let us.
You're recording this screen. So you can hide this up.
Join us also. I realized that.
That's about 5 seconds. It's not live.
Hi guys, it's now 7:58. We're gonna start sharp at 8 p.m. So let's see how many more can join us within 2 minutes time. Okay, my name is JD. I'm one of the trainers at AlphaPay. I work together with Kayong. And for this session, I'm going to start with the directional bias and trade management. Essentially, what we are talking about here is fundamental and market sentiment analysis. And with that, I'm going to cover the first session. And the next session would be on technical analysis that will be covered by Kayong. Okay, so for those who have not attended such a webinar before, what we usually do is we talk about the directional bias first. we check which are the currencies or the currency pairs that's the most tradable for the next week, essentially this week. So there are many things that we need to look into when we choose which currency pair to trade with. By looking at the strongest currency, pairing it with the weakest currency, that gives us essentially the best pair to trade, either a short or either a long. And we look at several factors: the fundamental factor, the sentiment factor. We look also into central banks. What is it that they're looking at right now? And we choose to look at that direction, the same as what the central bankers are looking at, to give us the clues, what clues there are inside the market right now, as to which pair is which currency is the strongest and which currency is the weakest. We match them up and we find our directional bias. Okay, it's 7:59. 1 more minute to go. Let's see how many more can join us. Every week we'll run a webinar like this, and sometimes we open it to public, for example today. And those who have not been able to catch this webinar, no worries. We also always record these webinars and we send it to our own members and sometimes students who have signed up for FSA or ATA. Right, it's 8 p.m. sharp. I see we have a good mix here. Some students, some members, some non-members from public. Okay, I'm gonna start. So I'm gonna repeat what I mentioned just now about what is it that I'm actually talking about specifically when I talk about fundamental and market sentiment. Okay, it's always about two things. Number one is directional bias. Number two is trade management. My name is JT. I'm an Alpha Pay coach trainer. I teach the Masterclass, which is the Fundamental Analysis and Market Sentiment Masterclass. Inside this Masterclass, I go through what a trader is encouraged to do before every week. On Saturday and Sunday, we find the strongest currency and we match it with the weakest currency to find a directional bias. That would give us the best currency pair to trade for the week. And during the week, when any of your trades are being triggered, we want to manage that. We want to make sure that all the data release or the news that is released over the week from Monday to Friday is aligned with your trade, which means if you're shorting Aussie Canadian dollar, you are expecting that US is going to release strong data and Canadian to release weak data, for example, and all to perform weekly over the week. So when that happens, your short of US Canadian dollar would be a good trade, and you want to keep that trade. As opposed to that, let's say if the oil strengthened over the 1 week time, it breached $50 and is breaching $52 per barrel, you might have trouble because your US Canadian trade would go against you, right? And you might want to get out early. Okay, let's talk about the fundamentals for this week. When I talk about fundamentals, this is just one of those factors that you want to take note of. Each of these currencies are backed by the economy of this country: Australia, Kiwi, Canadian, Chinese, Japan, US, the European Union, and the pound. Sorry, the UK. So this is one of the factors we look at when we decide what is the directional bias for the week. And this is last week's FSI, as you can see here. This is last week's FSI. FSI stands for the Fundamental Strength Index. I combine all the economic data that is found on FX Street, Forex Factory, any source that you can imagine, and we combine all this economic data and we calculate what is the rate of expansion or the rate of contraction for each of this economy. And the data you look at here, the red ones, sorry about that. And the data you saw here, the red ones, is actually a comparison between what it is today compared to a year ago. Yeah, I realize that it says 3 years, but it's actually a 1 year FSI. So I can see in a very clear-cut picture how has the economy performed over the last 52 weeks. And this is last week's FSI. Let's take a look at what it is this week. Okay, so last week we are looking at pretty strong performance across the board. We are actually looking at how Australian dollar has been improving over the weeks. It is still under contraction, but to the lessening extent. We saw how Kiwi has been strong over the last few months. Canadian dollar has been weakening. Chinese performing strongly, very nice. Japan still in the red, and as you can see, the next three countries, US, Euro, and the UK, has all been in the green. How about this week? The first thing that captured my attention for this week is I realized that all of these economies here are stronger compared to a year before. As you can see, the red box here, within it, I actually calculate as an aggregate how has these 8 economies been performing. And it shows me, large extent, all these countries has performed better than a year ago. And these are all based on economic fundamentals. And I'm talking about specifically economic indicators. Let's say inflation has improved. Labor has improved. Growth has improved. Trade has improved. And how do I know? It's a weekly change that captures all these changes. And how do I capture them? I capture the actual data minus off the previous data. And I get an overall picture, an aggregate of how the economy has been doing. So from this one picture here, I can find which are the countries that has performed the best over that 1 week's time, which is last week's data. And I trade these differences, right? So I trade what I see as a strongest improvement within the economy, or well, the opposite, the weakest economy. So I don't see a lot of them which are considered weak, which has deproved. I see a lot of these economies improving, right? As you can see from all fundamentals. But there are a few interesting ones. There are some that is actually supported by what I'm going to show you next, which is the Commitment of Traders report. I compared last week's Commitment of Traders report with this week's. And these are two very different two different factors. One is fundamentals based on economic data. The other one is the sentiment factor based on Commitment of Traders. For those who are not familiar with what Commitment of Traders, which is COT report, they are actually the big money's position, placing a bet in one direction for each currency. For example, if the big money is bearish about Euro, and you can see that right now, Euro is actually being more bearish compared to the previous week. And for those, let's say, bullish Aussie, we can see that previous week is actually lower than current week, which means the big money is actually more interested in longing the Aussie. Okay, so the fundamental data here, as well as the COD, must tell me that they are both aligned, which means the fundamental must be bullish, the COD must be bullish in order for me to determine whether or not there is a clear directional bias. So for today's purpose, I actually came up with all the biases for all 7 currencies, excluding China Yuan. And these are our biases for the week of 17 to 21st October, right? So starting from Euro, we are neutral in terms of bias. Pound, slightly bearish. Yen, slightly bullish. US dollar, bullish. Aussie, bullish. Kiwi, slightly bearish. And finally, we have Canadian dollar, which is slightly bullish. And following this introduction, I'm going to explain why we have this directional bias. So each of this, we have a good logical reason as to why we choose this as our directional bias. And what we do is we combine basically the US dollar with, let's say, Kiwi, and we start shorting Kiwi dollar. So that's how we use fundamental analysis and market sentiment. So without further ado, I will begin to explain why is it that we have these with this directional bias. So hopefully I remember all of them, right? So Euro, okay, we have a neutral directional bias, which means we don't believe that Euro is going to be the main driver of this week's currency movement, right? Because Euro is giving us mixed data, and we want to take this mixed data as something that is reactionary, not proactive, meaning to say that Euro is not going to drive most of these currency movements here. And let's see why is it that I say that it's neutral. Number one, FSI shows us there's expansion, and it is at an increasing rate, right? Data has been supportive of the ECB's view that easy money has helped the economy, and they've been saying that for the last few weeks, and we are actually seeing how this plays out now. Of course, we look at fundamentals. This is actually a bullish sign, right? So we would say that the euro can be long or can be traded, but we believe that there's limited upside. And why is that? For this week, the euro currency actually saw an additional short contracts. How do I know? Let's see last week's negative. Last week, we actually saw a net short position. How do I know it's a net short position? I take how many long contracts are there in the market. These are all futures contract for euro. And I compare it to the short contracts, which is 11,000 here. The long contracts is only 5,000. That gives me an overall net short of 82,000. Now, this week, there's actually a net short of 93,000. And why? I actually saw an increase in long contracts, but I see an even more increase in the short contracts, which is about 20,000. So what this shows here is that there's additional 8,000 long contracts, but there's also an additional 20,000 of short contracts. That gives me an overall net short of 93,000, right? So what this means is that fundamental is showing bullish, but the COT report is giving me a bearish momentum. And there's a mixed message in terms of fundamental and sentiment. I do not have an alignment here. And if I do not have an alignment, I would want to stay away from a pair like this, or sorry, a currency like this, because it doesn't give me any clue that which direction or which bias it's actually heading towards. But there is an ECB meeting because they're actually deciding on the rate this Thursday. Well, while their bias has been neutral and there is little or no indication of intentions, and I wrote about this in my central bank analysis, which I sent to the FSA graduates today. Basically, what I saw from the meeting minutes is that, well, economy is improving and their rate has already been pretty low. They are still printing euro at 80 billion monthly. Basically, there's nothing much for them to do except to wait for more data in order to know what other actions to take. Now, there are not a lot of clues as to what kind of actions they want to take, but we do know that a week or 2 weeks ago, they were actually talking about QE tapering, which came out as just a rumor, because very quickly after that rumor was sent out to the market, I think one of the officials, I'm not sure if it's Draghi, came out with his own statement and said that, no, I did not say anything like that. It was just a rumor. Right? So the QE tapering wasn't an actual move with a backed statement, but it does give grounds. What we are seeing right now in terms of fundamentals does give a good enough grounds to support that kind of move. In order for me to predict whether if that's going to happen, I have to still look at more data, right? So with good fundamentals, the ECB may lean hawkish this week. I do not have a bias, therefore I cannot say whether if there's a risk to a euro trade, but I would say this, there are little clue to indicate a sure bias. When it's 50-50, we are practically gambling. So I would not mention any bias for this particular currency. It will not be the main driver until Thursday, where if there is a clear sign from the ECB that, well, they're doing something more, or there is a hawkish sign that says that, well, the economy is doing well and I'm not going to cut rates anymore. Basically, that's it for 2016. That's a hawkish sign. And if it's a hawkish sign like this, then perhaps we'll see the euro back into the driver's seat. Okay, so that's for euro. Let's take a look at the second one. Pound. We look at pound, we always think about Brexit. But Brexit, what is that, right? So FSI has actually shown that there's a sign of bullishness now. For the last 1 year, it has actually been in the red zone. If we all recall, the pound, the BOE, wanted to actually raise rates in alignment with the US Federal Reserve System. But the idea is that there wasn't any good data to support that kind of move. And shortly after that, in June, there was a referendum. Brexit hasn't even occurred yet. It actually brought down the pound to its one of the lowest levels since 2008. But was that move even a qualified move? It was basically driven by sentiment. From this FSI, which is a fundamental strength, we actually see that there's an improvement in terms of economic indicators. Last week's PMI data in terms of service, manufacturing, and construction are showing us not just 1 month, but 2 months worth of expectation being exceeded, not only just being higher than its previous. Let's see if the good news keeps coming, because as of now, the good news isn't going to be enough. For sentiment, from sentiment point of view, there's an entire fear that's gripping the pound market is actually ruling the entire pound currency pairs movement. The COD maintains its bearishness, and this bearishness is at an all-time high. I'll explain that later. From COD wise, it's the weakest currency The COT index, if you see here, is actually at one of its lowest ever, showing at 1.37. Now, what this COT index means is that we take 3 years worth of net shorts and net longs position, and we find in relation to that range of 3-year net short and net long, how is this week's net short or net longs position? Now, what this means is that this current 95,000 net short position is one of the lowest ever in pounds COT net short position. Okay, it might sound confusing here, but basically what it's saying is that it is extremely bearish. There is a very high bearish momentum that's going on. Fundamental and sentiment is not aligned here, but sentiment rules. So it would be unwise for us to long on a very small pound good news in terms of economic indicators. So that's the reason why we say that pound is slightly bearish in terms of its directional bias. So for this week, the pound has two key data that's coming out. That's the CPI and labor data. The labor data is going to come out as the claimant count change, right? So will the pound good run continue? That's the question. Even if it's a good news, what we can say is that there's going to be a limited upside despite being good news. As mentioned, sentiment is a king here. The bearish momentum and the fear is more powerful than the fundamental data. If it's bad news, the bear will ride on hard because on top of the bad sentiment, there's also bad data coming out from this week. So we're actually looking at very, very limited upside for the pound currency. Risk to the pound short trade here is this. From all the charts that I've seen so far, even for the ones that it's considered exotic, right? The pound is actually technically oversold. So from technical analysis point of view, the RSI would be severely under the oversold region. As price approaches previous low at 1.21 major support, I'm talking about pound US dollar now, there may be a strong demand coming in. And when that strong demand comes in, your pound short will be in jeopardy, right? So, and today, I'm not sure what time, there is also the news that says that the UK court ruling on Brexit today would also be out on the 17th because there will be a hearing on the 13th and 17th. Today is the 17th, right? So the court ruling on Brexit, whether or not it's constitutional and whether or not Theresa May can just call for a Brexit without a parliamentary vote would also be out today. And if the court ruling says that no, that's not constitutional, you need to let the parliamentary members vote, and that is good news for pound. And it would also let the pound swing to the other direction. So beware of your pound short trade. The reason why we don't say that this is a super bearish trade is because these two key reasons. If there are any other reasons that's, well, basically allow pound to continue going lower than, let's say, 1.2 for pound US dollar, might as well just short and just close one eye, right? But we can't, because today there's these two key reasons that we want to take note of today. So pound, slightly bearish. Let's move on to yen. For yen, the FSI is showing us expansion under zero, but you can see that it has gone past its worst stage. The reason why we say it is slightly bullish is mainly this. It is a slow and steady increase, and will this give us above zero data, which means expansion? We have to wait and see. Okay, yen is often governed by sentiment. Yen has been strengthening within the market. I think we all know, yes, tested the 100 level for US yen, but at the same time, for the past 1 year, it has actually performed pretty badly in terms of economic indicators, right? So this tells us that there are a few things that actually drives this currency, and they are both not fundamentals. Fundamentals are seldom a yen thing. It is always the BOJ and the sentiment at play that moves the currency. That being said, the bulls decreased this week. Okay, we saw that there is a very much insignificant decrease in the long contracts versus its increase in short contracts. But because of that decrease in long contract, we see that the net long position has actually decreased by that much, from 68,000 to about 45,000. The bulls decreased this way, and despite that, we're actually looking at alignment between fundamental and sentiment. Why? Because it is still a net long position. At the same time, there is also improvement within the fundamentals data. Okay, technical analysis may be the key to trading yen this week. With no BAJ or only key JP, yen catalyst or Japan catalyst this week, which means Kuroda is not going to come out and speak. There's no slated news or any significant data released for the Japanese economy. We might have two scenarios here. Number one is yen will not be the main driver for currency pairs. And number two, yen, if it's the main driver, would follow technical analysis. And there is a bullish momentum for the yen pairs here, they are all pointing south for most of these currency pairs. Of course, the US yen right now is trading around 104 and is actually testing the resistance. And what if that resistance fails? If there is a failure with this resistance, we might have to look at stronger US dollar or weaker US dollar to give us more clue. Okay, so what's the risk to this Japanese long trade here? Number one is the risk on sentiment will limit the yen strength. We all know yen is one of the safe haven currencies, and in recent times, it is a most preferred choice for the safe haven as opposed to the franc or the US dollar. And because there is high risk on sentiment right now, the SPX, DJIA, they are all on an all-time high, so that gives us an idea that people are still being pretty risky. That risk appetite is still pretty high. That limits yen strength to a certain extent. It would not be able to breach the 100 level given its high level of equity price to earning ratio. Stronger US dollar would also leave the US yen upwards. And take notice of this. Even though this is a US move, this is a US news, it actually leaves the US dollar JPY to the high of 104, testing its resistance right now. That would also weaken yen across the board. So when you think of all the other currencies, for example, Aussie yen or Kiwi yen or Euro yen, the yen driver of that particular exotic currency pair, let's say the Euro yen, would also be affected by US dollar yen. When people long US dollar yen, it would also send all these yen pairs up north. And that poses a risk for your yen long trade, which essentially means a lot of shorts for these yen currency pairs. Okay, so we are bullish, slightly bullish for this yen because there's fundamental and sentiment alignment here. But please watch out for the US dollar yen trade, which I will talk about next. The US dollar is the same old. It has been expanding since July, and the data has been up and down. But despite that, we are still looking at pretty consistently green numbers here. And Yellen has a good point by saying that the case for a rate hike this year has expanded or has strengthened. US has been in the green since July 2016, and despite the mixed data, it has pretty much sustained over the last few months. Now, this dollar here, we don't exactly look at the COT for us to gauge the sentiment. We straight away just look at the DXY, for example. Now, what do I want to say about DXY? Basically, when it comes to gauging the DXY in terms of gauging sentiment on dollar, I would go back to technical analysis, looking at the dollar index. So let's go to the dollar index and see for ourselves what is happening right there. So last week, it has strengthened pretty much to its high of previous month. And we can see that that dollar index has now gone to a level which was, let me see, okay, which has gone up to a multi-month high. And this data here, this strength, this trajectory here shows us that there is a pretty predictable increase in strength of the US dollar. But what I wanted to say is that if we go up to the week chart, we will see that the 100 level is seldom breached. Yes, it does go up there, but it seldom is breached by the strength of the dollar itself. We could see that this dollar index continue to rise up to this $100 and then see a major resistance that spans till 2015, and then we're going to see that coming back down again. That being said, we actually still see $2 more worth of running space. That tells me there is still running room for US bull. So that is what we concluded for the US dollar, right? So there is a lot more upside to the US dollar pairs across the board, especially if the data this week, especially on CPI, is good data, right? The US Fed has been talking about the raising rates with good fundamentals. The reality is pretty close to happening. In the last I checked, there was about 70% chance that they are going to raise rates in December. Forecasted CPI is modest, about 0.3%. And if they hit 0.3%, if they hit 0.3% on the next CPI release, let's just take a look at that. This is this week's data. Okay, so if they have a 0.3% on its CPI data and 0.2% on its actual data, that would actually be good news for the US bulls, especially the CPI month to month. Because it is 0.3%, it actually is higher than its previous of 0.2%. That's even better news. And given that, okay, we actually are waiting for the CPI data to come out and give us more clue as to whether the US dollar is going to continue running until its $100 mark on the US indexed. Okay, so with that in mind, let's say CPI has hit its target and and all the data point towards a stronger US economy. What's stopping the Fed, right? In December, they must raise rates. The idea is if right now the Feds are forced a gun point towards Yellen's head and says, you must decide today. And I'm hold that FOMC today instead of December. Yellen will have no choice but to increase the rates because that's what she said and she has to stick to her promise because, well, she is the central banker after all, right? So the problem is that if within this 2 months, in November and December, in October, we haven't finished October, right? So there are still many other opportunities for bad US data to come out and spoil the whole plan, spoil the whole Fed's plan. That's the problem with the hike, the rate hike for this year. What's stopping Fed? Nothing's stopping Fed, but bad data. And with bad data, they can always go back and say that, oh, it's not a bad time. The case has now weakened. We want to probably wait for a few more months and wait until 2007 to make a decision again. So that's the only thing that's stopping them. Fundamentally, the numbers are showing that there's a pretty good case for that. So that being said, what's the risk to a US long trade? As mentioned just now, data is everything. A bad CPI data this week would temporarily retrace, reflecting some of the season's uncertainty over Fed's temperament. For any of the US long trades for this week, if let's say, if any bad data such as the CPI, especially the CPI comes out, your US dollar long would be in jeopardy. Okay, so be careful with that. Because of that bad data, there will be more excuse for central bankers like Yellen or her governors, right, to delay that kind of raise. And if they say that, don't be surprised, really, because every time there is a bad data, they will always fall back into the fact that, well, the data cannot support that kind of raise right now. Okay, so that's the US dollar. That being said, until the release of CPI, we are still pretty bearish, or rather, we are expecting the US dollar to continue strengthen over the week. If it doesn't happen, well, let's see what's happening again. Probably the Fed came out and said something. That in mind, make sure, since we're talking about one pretty clear alignment here, with that in mind, make sure that every of our trades is protected by risk management. Sometimes we can say that it is bullish, but it doesn't work out that way, and there are a lot of reasons to that. We just cannot anticipate that. In order to make sure that you are protected from such conviction, make sure you have risk management in place. All right, that means SL, or to be in front of the column and make sure that all the news are aligned with your trade. That's trade management. Now, moving on, we still have a few more currencies. This is Aussie. The Australian dollar has been expanding. If you look at the trend right here, it has been pretty flat for the last 52 weeks, and right now we are seeing some improvement in the economy. Right, so this economy tracer shows me that the economy has now improved over the last few months. You can see the trajectory is moving pretty comfortably into the green zone, and I really hope to see green for Aussie dollar. Why? Because Chinese is improving. Commodity prices are coming up. All I need to do is to see that the data is supporting a fundamental expansion within the Aussie economy. The Aussie economy, I can safely long an Aussie. Aussie's data has been encouraging to really see this currency go focus on commodity and China. So what does the sentiment tell us? The COT shows that there is no additional long contracts, but there is a lesser short contract in the market. Okay, so the overall net position is still an overall long. The shorts are close to zero right now. More clues from OI, there is increase, and this indicates more bullish momentum. What I mean here is that the long contracts are not increasing, which is disappointing because it would tell us that there is more bullish momentum, but there are decrease in the short contracts, which is encouraging, right? So this long net long position combined with the increase in open position here shows me that that bullish momentum is actually supported by adding more of this open interest, which means people who are still having an open position within the Aussie futures contracts market. All right, so that is a continuation, or that indicates more bullish momentum or continuation for this particular currency, Aussie. The event catalyst that is available for this week is pretty packed. RBA is coming out, and we are actually looking at other labor data as well. So let me just show you guys here. Aussie. Okay, we have Governor Low speaking, and we have shortly after that a monetary policy meeting minutes. I'll be updating the minutes via the central bank analysis for this week. And on Thursday itself, 8:30 a.m. in the morning, we have employment change, and I have something to say about this employment thing. Right, RBA is leaning hawkish since the last time we released the meeting minutes. For those who have read my central bank analysis, we would say that the RBA has actually talking about how Australian economy has been growing at an expected rate despite there is stifled growth, global growth all over, right? And there is good reason why they are leaning hawkish. Number one, China is recovering and commodities prices are coming up as well. Economic growth is stifled, but it's still on the positive side. Despite everything, they are actually pretty optimistic about what's going on in the Australian economy. Labor data on Thursday and RBA release before that. These are the two things we need to look at. But okay, there's a problem here. We are pretty comfortable with a long Aussie trade, especially a long Aussie Kiwi trade. But if the RBA releases a dovish tone, which would be a surprise to us, frankly speaking, that would send your Aussie long to a bad trade, right? So you do not want to get inside in a long Aussie trade if they come out with a dovish tone. For those who are already in a long Aussie trade, like myself, I would want to watch out for what is it that they're actually talking about in the meeting minutes this coming Tuesday. Okay, but they did mention that there would be no more cuts for 2016 itself, which is good news for me for Aussie Bull. What this means is that they are not going to cut rates any further. That means that the downside for the Aussie trade, right, would be limited and would be temporary. But I don't know. I don't know how dovish, if they are going to be dovish, I don't know how dovish RBA is going to be. I need to watch, and that's the reason I keep a central bank analysis long, right? So the second thing that can happen to your Aussie long trade is this labor data. And now labor data is not Aussie government's strongest suit. Just like how the earning reports come from China is not exactly their strongest suit because they are not reliable, the labor data in Aussie government has always been a problem where their reliability is always being questioned. Some say that private institutions' labor data is actually more reliable than Aussie itself. Now, for what reason they don't want to publish better data or better managed statistics? I'm not sure. Maybe it's political. But the idea is this. For Aussie's labor data, we want to make sure that we actually capture what's the correct information. Now, there's been improvement in the unemployment rate, and the unemployment rate has been around the same level because there was increased participation in part-time jobs and not full-time jobs. Full-time jobs are actually on a low. Despite that, there are still people looking for jobs. Okay, people are looking for jobs. More and more people are waiting to work, and they are willingly joining the part-time workforce because they need the salary, they need the money. At the same time, the full-time jobs are not being opened up, and that's not good. Despite any kind of good news that's coming out from the Aussie government in terms of labor data. So keeping that in mind, what we see here is a pretty interesting thing. The Aussie employment change, they're expecting to have an increase of 15.2 thousand jobs as opposed to last month 3.9 decrease. And at the same time, they're also expecting there will be a higher unemployment rate. So what this means is what I said just now, there are more people waiting to work. And hence the employment force, the workforce actually expanded. But at the same time, the jobs, the full-time positions are not opening up. The only way the Aussie data for labor is going to help Aussie's strength case or the bull case is that the jobs, the employment change actually hits that 15.2 mark. Let's see what's going to happen on Thursday, 8:30. For those who are optimistic and more aggressive, you can start longing your Aussie today, and you can start longing Aussie tomorrow and see. If you're not afraid of the data, you can keep the trade despite, or if you are afraid of the data, you can actually get out before 8:30 on Thursday. Okay, so that's how we can trade the Aussie dollar. Now, we are nearing the end. Just bear with me, there's two more currency, right? For Kiwi, Aussie's little brother. Let's see what they can offer us. The Kiwi has always been in the green, but unlike the US counterpart, its green, its expansion is not sustainable. It has actually been on a down ever since August period. And this has actually affected the Kiwi strength. It has actually breached 747 for Kiwi US dollar, but right now is actually trending downwards. Kiwi's data has been positive, but since August, we're actually looking at a minor downturn. Would this minor downturn persist? I'm not sure. Let's take a look more, right? See if there's more clues. The COT shows us a lackluster market, which means it's not performing badly, but it's not performing very well either. Why? Because there's lack of participation in the Kiwi futures contracts market. It's currently at a net short position, and there's no surprise there, and roughly equal of number in terms of long contracts and short contracts. The OI is decreasing. Again, no surprises there. It just shows that there is very little interest in that pair, apparently. Right? So not much clue there again. For Kiwi, the two things that the central banks are looking at is, number one, dairy prices and the CPI. The RBNZ is leaning dovish because this central bank is right now the only major central bank that is still looking to cut the rate where necessary. Okay, that's what they mentioned within the last meeting minutes. And there's still concern on growth and inflation. Let's see what CPI and GDP has to offer. And this is happening pretty soon, if I'm not wrong, the next Monday morning, right? So at 5:45 a.m., I would be up early in the morning and I'll be monitoring these trades, this data, the CPI quarter-on-quarter and the GDT price index. I mentioned last week on doing my FSA Masterclass, the Fundamental Analysis and Market Sentiment, that the GDT is actually facing one problem right here. That is that there's a milk glut that's happening inside the world, in the world, right? What does it mean? It means that people are overproducing on milk. Right, so there's actually a problem here for the milk producers, and when there's a problem with milk producers and the milk market, the Kiwi is going to be affected. There are a number of cows in New Zealand. This is actually over exceeding the population in New Zealand itself. So, pardon the internet speed. So basically what we are seeing here is that there are millions of gallons of milk that's being poured away, excessively producing milk. And why are they pouring away? Is because they want to keep the price at an affordable price. They don't want to be like, all they produce and then they sell it at a cheap. The problem is you cannot throw oil, but you can throw milk, pouring it down the drain. So there are actually millions of gallons of milk that are being thrown out right now, and this would affect the GDT on Monday, which is on Tuesday, tomorrow morning or night, because the time is tentative here, and that would send the Kiwi down another sell-off. Just bringing out Kiwi USD trade, another position I've taken since last week. It would actually trigger another sell-off within the Kiwi position again. I will just move it down to the H4 chart. Okay, technical analysis is not exactly my strongest suit, which will be covered by Kayong later, but let's take a look at that. There is actually a bearish momentum happening ever since October, and this trend might just continue if GDT and CPI goes against the expectation, or even perform larger than last week. So Kiwi, we are slightly bearish because of the current situation in milk, and also there's a trend for Kiwi's expansion to be lessening. The risk to Kiwi short trade is that if the equities continue to trend higher despite lower EPS, then we will see Kiwi starting to strengthen back, because Kiwi is a risk currency. Any risk on sentiment, lower VIX or SPX or DJIA trending even higher, we will see Kiwi short trade being in a bad trade. Again, talking about the SPX, the equity, if it doesn't reach 2120 major support, there's also limited downside to the Kiwi trade. Let's take a look at the XPX. I just use one equity. There are a lot of equities that you can actually use to gauge the risk on sentiment or risk of sentiment, but the XPX is my favorite. Why? Because it is actually it actually covers the world's largest private public listed companies. Right? So what do I mean by if it doesn't breach the 2120? Let's take a look at the big chart. Okay, if it doesn't breach this level, which is a major support, a resistance turn support here at 2120, we may not see there is a further downside to the kiwi. As long as this level holds and it continues goes higher to, let's say, 220 level, we might see the kiwi's strength coming back into the market, because fundamentally the economy is still doing pretty well, right? So for anybody who wants to short the Kiwi dollar, please note that the equity market is a very important gauge for your quality of trade. So manage your trade well by making notes on what's happening on the equity markets as well. Okay. Now, the last one, Canadian dollar. It went all the way from all-time high. It improved since 52 weeks ago in August, and after that, it just went downhill, dipping into the red zone, and right now it's heading for the surface. Can it go back to the green? Let's see. Sorry about that. That's a typo. The Canadian data has been positive, but since August, we're looking at a minor downturn. Okay, with the COT showing us that there is a net short, we're actually seeing alignment within this week. So the Canadian dollar can be pretty Canadian dollar can be a pretty good trade, given that all is right now trading above and trading around the $50 per barrel. And if it actually breached the $52 barrel major resistance, we can actually see more upside to the Canadian dollar. All right. So it is a promising bull, although only slightly. Why? Going back to the fundamentals, yes, we see that there's improvement. It's heading towards the zero, but it's still in the red zone, hence slightly bullish, right? So we see that there is actually a decrease in short contracts, meaning people are closing their short positions, but it's not exactly very significant. So what else can we see from this particular currency? I don't think this is right. Pardon that. The BOC is not very optimistic on its economic performance, but a large part of it is due to commodities. What this means is that in my central bank analysis, I actually mentioned that Canadian central bank with the BOC is actually pretty pessimistic about its economic performance, and they are blaming to the growth of the US, also blaming on the low price of oil. And well, while this is supported, but the thing is, they cannot actually freely use the monetary policy like the interest rates to control the economy, because right now they're actually facing housing inflation, and it's partly fueled by this easy money that's coming on because of all these expansionary monetary policy. Bad loans are everywhere. The banks are more or less in trouble. Well, if they say it's trouble, it's nowhere near Deutsche's level, but there are a lot of bad loans. It is a problem. Rate cut, it's hardly a choice for the BOC. So while they are not very optimistic of its economic performance, they cannot actually raise rates anymore. Cut rates anymore. That would actually fuel even more housing pricing problem. And we won't want a similar issue to happen again that mirrors that of the 2008 subprime mortgage crisis. Essentially, it is easy money fueling the housing market. And that could be what's happening in Canada right now. Right? So for those who are longing the Canadian this week, make sure that you are managing your trades well. So what can go wrong? The oil promises are not kept, and this often happens. OPEC says one thing but doesn't do one thing. Putin can say whatever he wants and doesn't do it again. So they cannot just move the market, the oil prices especially, to a level of $52 or $50 without actually doing the things that they promise, cutting production, freezing output. All this are just empty talk. And if it's empty talk, we'll be looking at how the prices can go back deep under the $50 per barrel again. So if it goes down under $50, needless to say, the Canadian dollar is going to be affected. So you're actually looking at a pretty bad Canadian long. Don't let that happen to you. If you're trading Canadian, make sure you're also watching the oil price at the same time. Again, we're also looking at how BOC might sound dovish for good reasons, because the economy is still pretty much on a tight spot due to rising inflation and due to its limited growth. The economy cannot simply just change from oil producing into services, for example. And because of that, they cannot do much about the economy except to wait for growth to come back, or trade more with the Chinese counterparts. If the BOC is sounding bearish, that would also bring a lot of bad news for your Canadian long trade. So watch out for these signs of weaknesses when you are trading the Canadian. And if the stars all point towards Stronger Canadian. Let's take a look at the Forex Factory for this week for Canada. There are pretty important things that's coming out. I mentioned that BOC is going to be speaking. There's also the CPI data. All right. There's also the CPI data on Friday. If all this point towards stronger Canada, then you can keep the trades. If not, you might just want to get out of the Canadian dollar before the week ends, and you go to next week. Okay. So that marks the end for fundamental and market sentiment. Okay. So if there are any questions, please ask us, and you can always post us questions under the team viewer, under chat, right? So if you want to ask me any questions with regards to any other currencies that you might have in mind or currency pairs, okay, in terms of fundamental and market sentiment, please feel free. You have 5 minutes. We can take a 5 minutes break before Karan takes over to talk about technical analysis for the next week. And take a chance to ask me any questions, especially if you are from public. If you have no idea what fundamental or market sentiment is all about, really ask us and see how this can actually improve your trade starting this week. Okay, Ken? So for all those who did not, I think there are a lot of people who missed out the first few slides. For those who have not seen this week's FSI, just want to show you guys that this is how the economies are performing relative to about 52 weeks ago. That's 1 year. And if you have any questions, I will answer them. Okay, so let's take a 5 minutes break. Oh yes, one more thing, guys. It would do us a huge favor if we would go to Facebook Alpha Play Trading Forex Trading School, and let us know how is our session, our webinar. Okay, please leave us a review if you like us. If you don't like us, leave us a review. You can give us a good or bad review. It's fine. Just give us a 5-star. How about that? The thing is, if you like what we do here and appreciate what is it that we are doing, give us something good, a good review. That will really motivate us to do even more things like that, and motivate us to share to public members as well. The thing is, we are doing this for our members only, and some to our students who has already attended our fundamental analysis and market sentiment course. We had one last week, 15th of October, which was pretty encouraging. There was a full house, and we are going to conduct another one personally by me on the 29th of October. For those who are not familiar to fundamental analysis and to market sentiment analysis, come join us on the 29th of October, which is the Saturday, from 10 a.m. to 6 p.m. in this one full day session. We are going to talk about how you can actually make use of a lot of free information on Forex Factory, on FX Street, on MyFX Book, on Central Bank, to talk about how you can choose which are the currencies that you can best trade for the week. Okay, so that's creating a directional bias. And also over the course of the week, you can actually make use of it. Again, all this free information to manage your trades better. If you are a good trade, you keep them. If you are a bad trade, you don't even have to wait for it to hit the SL. You can get out with a small loss or even a small profit. And that is what fundamental analysis and market sentiment is all about. Okay, so really, really appreciate it if you guys would drop us a review. It'd be really great. It'd be really helpful, so we know how we are doing. All right, and I'll hope to see you guys on the 29th of October, 2016. Okay, sure. Kayong wants a 5 minutes break. He wants to prep for the next session. My name is JT. I hope you enjoyed the session. I'll hope to see you on 29th of October. Thank you.
Okay, welcome back. All right, so JT had a great session, all right, sharing with you guys about the fundamental and sentiment outlook. So next up, what I'll do is I'll share with you more on the technical perspective. All right, so what we do is we use fundamental and sentiment to give us a directional bias and an overview of what we need to take note for the week. All right, in terms of what are some of the key events that's taking place. But we use technical analysis to enter our trade, all right, and also to determine where we're going to put our stop loss and etc. All right, so just like to remind everyone that if you have any particular questions, feel free to comment them under our Facebook live video, all right, or alternative for those who are in here directly in the room, feel free to write in the comment chat session, all right, if you have any questions. All right, so let me clear this chart, all right. Okay, I'll just remove this chart later on, all right? But let me just go over to this week, some of the watch lists that we have identified, all right? Again, these are not to be taken as signals directly, right? But it's just potential setups that we are monitoring. What we do is we actually put price alert level, meaning when price hit that particular level, we actually receive an automated alerts, and we'll then monitor again based on the price action in terms of technical, based on the current sentiment and fundamental, do we want to take the particular trade? Right, but since we have some, all right, let me just walk you through in terms of Aussie and Kiwi, all right, Aussie dollar and Kiwi dollar, because I think just now JT mentioned that it's interesting because if you look at the calendar, all right, it's actually happening. There are two events taking place tomorrow, very early in the morning. This is in Singapore time zone. All right, tomorrow at 5 a.m. All the way until 5:45 a.m. we have Australian as well as Kiwi dollar, and then after that, later part of the morning at 8:30 we have monetary policy meeting for the Aussie. All right, so what we have over the weekend is that we identified two potential setups on the Australian dollar as well as the Kiwi dollar. All right, and both of it, you can look at this in terms of technical, they are both bearish setup. Meaning technical wise, it's a sell potential trade. So let me just bring you to Australian dollar. Okay. All right, so for me, in terms of technical analysis, I don't go all the way until the weekly time frame. All right, but what I do is I simply stick towards the daily time frame as my higher time frame analysis. All right, so let me clear my chart. Right, so what you do is usually the analysis the approach that I use, all right, let me zoom out a little bit more so you can see the overall picture. Okay, so basically in terms of the step and the top process that I do in terms of technical analysis is I don't trade on the daily time frame, right? But it's important to have an overview in terms of how the market is moving in terms of technical analysis. All right, so right now what you see over here is based on the daily time frame, we are actually very much in a consolidation zone. Right, simply means price is not moving in a very strong particular in any particular direction. All right, and it's not clear in terms of whether it wants to go higher or it wants to go lower. Right, so you can see if on the daily time frame, what it's doing is forming a consolidation pattern. All right, and if we see this kind of things happening, all right, we drop down to our lower time frame on H4. We start to adopt a strategy that we use, all right, to engage the market when it's in a range environment, right? So what we identify over here, okay, is that we have a potential pattern forming. All right, so we use a lot of Fibonacci tool. What we do is we pull from the latest swing over here, all right, and all the way to start measuring the legs, all right, the swing points in the market. Let me just put in the correct level. Let me just redraw my Fib. All right, if I pull my Fibonacci from this swing, all right, towards this swing, what we have is a potential pattern, advanced pattern that is forming. All right, and this is called the cipher pattern. All right, so for those who are not familiar, basically what we do is we use this kind of technical analysis to give us area that which we want to monitor closely for the particular week. So if price eventually reach that area, all right, we'll be looking closer and you know, analyzing the current sentiment. Is it valid for us to enter, and the fundamental, does it align? Right, so just now JT mentioned a little bit about, you know, how Australian dollar is more in terms of the bullish part. So this one we need to monitor, look out for tomorrow. All right, so the next data coming in is actually tomorrow morning. So if this two comes in negative, meaning it contributes to a bearish sentiment, and if price rally higher towards the 7665, which we're already eyeballing this level, right, then we will take the trade. But of course, if tomorrow the reports come in and the central banks are hawkish, basically the meeting minutes is very bullish, is very positive outlook, we will be skipping this particular trade, right? Simply because the current sentiment doesn't align with the technical play over here, right? So this is an idea of how we use combined technical analysis together with our fundamental and sentiment bias, right? But what I want to walk you through is we won't spend much time into, you know, sharing with you in depth the criteria, the ratios as how to do all this pattern, but we will be sharing with you more of like some of the potential levels that we are eyeing, and you can also look out for those levels, and you know, the top process that we have behind taking this kind of trades. All right, and again, just to remind you not to take it as a pure signal. That means don't just blindly follow what we shared with you guys. Right, so just now I mentioned that we also look at Kiwi. All right, so this is Australian dollar, one potential up there at 7665. Kiwi, all right, this one I also shared out on our weekly blog post. All right, so if I bring you to a daily time frame first to look at what's happening on the technical level, you can see that recently price has changed. All right, from a previous from a recent uptrend. All right, and then after that, recently price has started to show sign that is changing direction. All right, it's starting to show sign that it's wanting to go lower. All right, and this is on the daily time frame. So you can see the difference between the Aussie dollar chart and the Kiwi dollar chart. All right, the Aussie dollar chart just now we analyzed is in a range environment. So we adopt a strategy, all right, to tackle that range. But if the market like Kiwi dollar is in a trend environment, we definitely cannot use that kind of strategy to tackle it, all right? Because you get stopped up a lot. When market is trending, you need to use a trend strategy. Okay, so on daily time frame, we identify that market is trending. So what we do is we drop down to our H4 time frame, and we start to analyze which potential area can we look for an opportunity. Right, so just now I shared on the daily time frame, it was moving higher, it was in an uptrend, and then we can see that over here price starts to turn, all right, and it bounces once, it goes up again, it comes down, it bounces a second time, it goes up, and then it bounces a third time. All right, so you can see this level, this is a significant support in the past because price respected it 3 times, and then only the 4th time did it break through it. this break is pretty strong and it's a confirmed break because price continue falling further. Right, so what we're waiting for right now is to look for a retracement back. Basically, we don't enter over here because price has been falling significantly. All right, what we want to do is we want price to at least have some form of pullback. That means a retracement back towards the previous support, now turn resistance, to look for an opportunity to trade in the direction of the trend. All right, and of course, this one just now JT also shared a little bit. Kiwi is more towards slightly negative, and what you need to take note of is, of course, this week is very unique because of sentiment. We have a lot of key companies earnings release in the US, all right, and that's going to affect your equities market and in turn affect your risk environment in the market, and that has a direct impact on your Kiwi dollar as well. All right, so what we are riding on in this particular trade is when technical and fundamental and sentiment align. Right, so what we are waiting for is for price to rally back towards this 7240 to look for an opportunity to sell. Right, and just like to share with you, we also use RSI, and what we identify over here, let me just put in, all right, to show you clearer. You can see that price is forming a lower low, right? But in terms over here on RSI, okay, you can see the RSI is printing a higher low, right? So this is what we call a divergence, right? And usually when there's a divergence, there's a certain probability that price will start to turn, right? And of course, we see price then eventually turn over here. Right, I'd like to spend more time to talk you through the thought process that we have and how we can actually take opportunities like this. So when you have a divergence, you're actually more on the counter trend mentality. All right, basically, if you take this kind of trade, it's more of a counter trend because over here it's very clear that the recent trend is a bearish one. Right, it's a downwards trend on the H4. So if you spot this kind of divergence, how can you take opportunity of it? Right, so we are on a bigger time frame on H4. We are interested in this level of 7240. Right, we are interested to short it. But we can also ride for those who are more aggressive. All right, you want to take more trades and more opportunities to play out in the market. You actually can go counter trend as well. So if you go over to the H1 time frame, this was the divergence that we identified, and you can see price eventually start to turn, right? And we expect price to retrace up towards that level just now identified on higher time frame, which is over here. All right, the highlighted box at 7240, right? But price can do two things. One is it goes up further to hit that level that we are eyeing. Second thing is it doesn't retrace to where we want, and then it starts to fall further. Right. So for those who are very aggressive and taking the counter trend, you can see that price has shown certain confirmation that is bottoming over here. So what you do is you can expect price, right? In some way, all right, having a certain probability that is gonna push higher towards where we are looking out for in terms of higher time frame. So let me bring in my FIB at the 61.8. All right, we use a lot of 61.8 because it's one of the golden ratio. So what we see over here is we have this divergence and price has break the neckline. Right, so if you're not familiar with this kind of technical jargon, do not worry much because you can just easily Google them and you can find out what it means for all this terminology that we are using. All right, but basically neckline simply means the midpoint of your bottom pattern. All right, so this is the midpoint over here. You can see price has break above it. All right, so what we are waiting for is for price to retrace back to the 61.8. You can see that earlier today during the London session, right, price did retrace, right, but it barely touched it. All right, so it's about just 4 pips away from it. So again, this one brings me to sidetrack a little bit that when you're trading, all right, we can't identify specific level towards exactly to that point. All right, so what we identify in trading is always looking at areas. All right, so as long as price comes close to this area, let me just change that color. All right, as long as price comes close to this area, all right, give it about maybe 5 pips above, 5 pips below, all right, it forms a zone. You can see once price touches it, all right, it breaks that neckline, it comes down, retrace, touches this area, and now price is showing sign that it's moving higher. Right, so for those who are looking to trade the counter trend, all right, you actually can do this as well. Basically, you look for a buy setup, taking the counter trend with a target at the previous structure at the top. Right, so if I go back to the H4 time frame to show you, okay, so this is how it looks like. right? Basically, you are aiming your target for your counter trend trade all the way back towards the top. You take profit out of it, and then you flip your position from a buy trade to a sell trade, riding the trend continuation. All right, but again, all these are all ideas based on pure technical. So you know, for our graduates, what you need to do is always align your fundamental and sentiment towards this kind of technical setups as well. Right, so this is something to share with you guys in terms of Kiwi dollar. But for us, we are just looking for this area, right? So we didn't trade this trend continuation on the 7240 level. All right, so again, if you have any questions, feel free to drop it to them. Drop it there. If you have any particular pair you want me to share in terms of ideas and some of the perspectives that we have, feel free to drop it there as well. Right, wait, let me just look through. Okay, let me share with you the dollar Canadian. Right, this is interesting as well because if I recall correctly, we do have some kind of setup. Okay, let me clear my chart. Hold on, I have a question. I'll read out the. No, okay, never mind. Okay, so let me go through. Just now I mentioned about dollar Canadian. All right, so again, to walk you through the process that we look at technical analysis. Every time we look at it, we look at what's the overall environment in terms of technical. Right, is it moving in a range or is it moving in a trend? So right now, if you know, I just give you some time, you should be very clear to you what is the environment on dollar CAD as of now, right? You can see it is previously in a downtrend, all right, and then after that it just bounces up and down, not moving in any particular form of direction. Okay, so what we identify over here is a range environment. So what we do is next we drop to the lower time frame on H4, right? So let me expand this again. On the lower time frame on H4, right? So we start to identify if we have any setups based on the strategy to tackle a trend. A range environment, right? So over here, over the weekend, you can see that we identified this setup, right? Which is a pattern. And how we do it is, again, we analyze in terms of price movement, price swing. You can see that from this low, all right, this recent low towards the recent high, we put in our Fibonacci level. Right, you can see price after hitting this recent high, it retraced back towards the 61.8 Fibonacci. Right, so because of this retracement touching the 61.8, we do have a pattern forming. All right, and this pattern completes. How we trade it is we use the extension tool. All right, and this pattern completes at the 127. All right, right here. All right, at 1.3090. All right, so if I highlight this area. This will be the area that we're looking for price to come down, and we are looking for an opportunity to buy this trade. Okay, so if I start to add in more technical play to it, right, you can see that we do have an overall bullish channel as well. So when we look to buy this, all right, we are still buying according to the technical trend. All right, and if you combine with fundamental and sentiment analysis, you will still remember that JT mentioned just now that we are bullish on dollar, right? So this is something that you take note of. But this kind of sentiment and fundamental will shift accordingly as the week progresses. All right, so what we can share with you is as of now, what is the sentiment and what is the outlook. Right, so that one you need to take note of. So this is very close, right? Because price deep a little bit today during the trading earlier trading session. All right, so now is trading at 1.3145. The area that we're looking at is 1.3095. That's about 50 pips away. Right, easily can reach that area as of today. Right, so we are looking for a setup to buy over here. So again, if you want to take a smaller trade, meaning on a smaller time frame. All right, if you're more active on trading and you're doing intraday, what you see is that price doesn't move in one particular direction all the time, right? So what you can see on this chart, let me just rescale this again. You can see on this chart is price move up, all right, and then it comes down, and then price move up, and then it comes down again, all right? So what we can expect is price always move in waves like this. So what we can expect is potentially price can do this, all right? It can go higher. Before it decides to come down again, All right, so then the question you should ask yourself is, okay, if we expect price to do this, can we take an opportunity to enter or take any trades, all right, when price does come back up? All right, so what we saw is price previously has this trend, all right, and we have a minor uptrend, and price broke it, right? So what we do is we then can also take our Fibonacci tool, all right, again measure from the recent high to the recent low, looking for the 61.8, right? So let me just clear this. We are looking for the 61.8 here. So again, what we are waiting for is for price to this level, this area, and we can look for an opportunity to short and target price to complete the pattern and the key area that we are monitoring on a higher time frame right below at this zone. Okay, so you can see there are many ways you can play out with technical analysis, but all the time when you want to do all these things, all right, in terms of having different strategies to tackle different market environment, you need to be very clear what are the rules to engage the market. And when you enter a particular trade, you need to ensure that all the criteria that you set for yourself is fulfilled. Meaning, if you want to look into alignment of Fibonacci, alignment of trend, alignment of fundamental, alignment of sentiment, you need to make sure that all these things are in place. All right, then you can take that trade. All right, so basically you don't rush into a trade just because you feel like trading. Right, you need to always stick to the plan. If let me just put in all my other fib to see if we have any other potential setup to share with you guys. Okay, let me see my, okay, RSI has no trade over here, all right, but what we see is that with this downswing and this small retracement up, all right, touching the 38.2, we do have another setup in terms of pattern, right, completing at the 88.6. So if I draw in how it looks like, right, it'll be something like this. All right, it's also another potential technical play. So again, what I want to share with you, right, with all this is that you will not lack, as in there won't be any lack of opportunity to trade in the FX market, right, especially in the Forex market, because it's so volatile, it's so liquid. You can almost spot opportunity every day. Right, but as a trader, you do not want to take all trades because you only want to take those trades that's high probability. And of course, depending on your own style and personality, right, different traders will have slightly different trade plan. All right, but the important thing is always follow that, and you need to do it consistently so that over a period of time, you then can start tracking whether your strategy, your system, given over a period of time, for example, a quarter, 3 months, or even six months, up to a year, over this period of time, does it give you an edge in the market, and is it a profitable system, right? If it's not, then you can start evaluating. But if you are a trader who anyhow, decide today I want to jump in at this particular price without any clear form of strategy, it's very hard for you to do any form of evaluation because anything that is not tracked, all right, that is not consistently done, you cannot track it, you cannot evaluate it. So you then cannot improve as a trader. Right, so just want to share with you that it's very important to do all this, right? Basically to plan your trades and follow the trade plan itself. So just to share with you, right, you see, you can straight away see that looking at just 3 currency pairs, we have many potentials set up in the Forex market itself. Right, dollar CAD, we have few levels to keep an eye on. Just now I shared with you Aussie and Kiwi, right? Both have setups as well. Right, so let me go back to Aussie as well because we do have, okay, this is on H1. All right, Aussie, very similar. Just now I shared with you the dollar Canadian, right, that setup in which price always move in wave. You can see Aussie also move in wave. Price move down, it comes out and then it moves down again and then it comes up. Right, and what you see is that price recently broke this minor downtrend line as well. Okay, so the similar concept can apply. All right, so when price broke that downtrend, minor downtrend line, we start to pull in our fib. All right, and we look for this area on 61.8. Okay, owner. All right, we are looking for this area at 61.8. Right, so what we want is we are projecting that price will dip down over here. All right, and we can look for an opportunity, a confirmation. When we mean confirmation, I'm referring to technical, basically a candlesticks formation. Basically, you see a pin bar or an engulfing, bullish engulfing bar. Those are technical confirmation. And of course, you also want to align with the current sentiment of the market, all right? If the market is very bearish for Aussie, you do not want to go against it because it's very easy for market to stop you out of your position, all right? So if everything aligns, you can look for an opportunity to buy the Aussie, right? And of course, you can aim all the way back up towards this area that we have identified on a higher time frame on H4, right? And if you look at how price swing, right, from this low point to the recent high, it retraced back towards the area between 38.2 and 50% retracement. We do have another pattern as well. And this pattern completes at the 88.6, right? So this setup is very similar to just now the one that I show you on the Aussie Canadian, right? We have another smaller pattern forming over here as well. All right, complete thing here. So if I bring you to the bigger picture on H4 to show you the overall outlook, right? What we have is we have price on this two dotted trend line. You can see it's on the daily time frame. You can see price is consolidating, right? So what we are analyzing over here, we are trading price that is bouncing off the consolidation zone. All right, on higher time frame H4, we have this huge pattern forming, looking to short the market at 786. Fibonacci retracement. All right, I'll just highlight the area for you over here. All right, and on smaller time frame, price can do few things. One, it can straight away go up and then hit our area of interest to look for a short opportunity, or price can start to come down first before it goes higher. All right, so when price dip down, we have an area of interest over here at 7560. All right, and if it dips further, we have another area of interest at 7525. Okay, so what we do over here, what have we done is that we actually plan out, okay, the different scenarios that price can potentially do, right? Once we have this kind of plan and we have certain scenarios that we already prepared ourselves, what we just need to do is continue monitor the market, and when the criteria, that means if price really comes down, we know how to respond to it, right? And we do not just, you know, when price starts to come down and then we start to be panicked, we start to feel anxious, nervous, and then we just make a decision based on our emotions, right? We do not want that. You do in trading, you need to be planned. You need to be following certain rules that you have set for yourself. Okay, so this whole process of this webinar, sharing with you guys all this, is not to share with you trade ideas, right? It's not to share with you certain levels to take your trade and such, but it's really to walk you through the thought process behind how JT and myself are identifying potential setups as well as managing our trade itself. All right, so let me quickly check if you guys have any questions. Again, feel free to always drop it. All right, if not, then I'll just share with you what we have analyzed over the week. All right, let's take a look at Japanese dollar yen. All right, because if I'm not wrong, we do have some interesting setup over there as well. Okay, let me just clear the charts. Okay, so I just since I have this over here, right? This was analyzed last weekend, right? So it was about 7 days ago, right? And you can see that, right? When we spotted this area, if you blindly just put a pending order, right, without understanding the current fundamental and sentiment at that particular point in time, you would have easily stopped out at this trade. Okay, so then the question is, you need to start asking yourself, how can you filter off trades like this, such that you will avoid taking this kind of trade? Okay, it's very simple. If you look at dollar yen, right? Let me just use this as a case study since I have it on my chart. I'll bring out my dollar, all right, and I'll show you what happened for last week. Right, so this was identified last week. If you look at last week dollar data, okay, you can see overall is very positive. All right, core retail sales coming in at 0.5, PPI 0.3. If you look at previous data, it's all an improvement. All right, the only dip was at consumer sentiment, and to understand this better, all right, I also mentioned this in one of the videos that we shared, is that this consumer sentiment is falling simply because of the uncertainty in the presidential election that's happening in the US right now, right? So this is pretty common in terms of consumers' confidence in the economy is definitely going to dip because of that, right? And you can also see that, you know, retail sales and core retail sales are both very strong. Okay, and that gives that strong bullish momentum on dollar for the entire week as of last week, right? And of course, this is coupled with Japanese yen, and you can see Japanese yen actually weakens quite a bit, right? Because of risk-on environment, and you can see equities market are rallying and such. So that's why the Japanese yen is weakened, all right? And that's how you can filter off trades such as this and not take it. So this is a quick case study I want to share with you since I have this drawing on my chart, right? But today, this particular week, if you look again, the same process, right? You go over to the higher time frame on daily, right? What you see is over here is a downtrend in the past, and let me just scale out a little bit. All right, it's still in a downtrend, but recently price has formed 1 bottom, 2 bottom, 3 bottom, 4 bottom, and not going any lower. All right, and what we, if you just simply draw in some lines to show you. Whoops. Okay, previously it was in a consolidation, and then just recently it broke up, right? So last week price broke this downtrend line. So this, if you just play on the technical analysis part, right, price has transitioned from a consolidation to a potential uptrend, right? But it's still a very early sign of uptrend. But if you drop down to H4 time frame, right, because of that, you might want to decide in terms of technical analysis to trade with the overall trend. Okay, so price has moved higher, and then it starts to move in waves again, all right, in swings. So what we identify over here, if we pull our Fibonacci from the most recent low towards this recent high point, you can see price retrace all the way back down towards your 61.8, right? So that gives you a kind of potential setup that we are looking out for at completing at 127. Right at this area. Oops. At this area. Okay. I think my software is slow. All right. So at this level at 102.97. So if you round out a little bit, the area is about 103. It's a confluence of not only a Fibonacci extension level, but it's also a confluence of an even number, right, at 103. So that's a very strong psychological number, and it acts as a natural support as well, right? And what you see over here is we do have, let me just drop the horizontal line, right? If you look towards the past, all right, we do have some form of structure support, all right, resistance here, support as well, all right? So this level is pretty significant. All right, not only in terms of fit, in terms of support, resistance, also in terms of a psychological number. So what we're waiting for is for price to dip further. We'll be looking for an opportunity to long the market at this area. Fundamental and sentiment is still, in terms of dollar, is still buying the dips. All right, so any dips in dollar is an opportunity to look out for a long opportunity in terms of the dollar. Right, so this is on the H4. Again, if I drop down to the lower time frame, we can see even smaller kind of setup, right? If you just take the most recent one, let me just clear the fit. The most recent one, all right, from this swing low to this swing high, right? If I'm trading on H1, it's more of an intraday, meaning this setup is valid for a very short time, and then you need to put in more effort to monitor the market, right? You can see this retracement comes at 0.5, show some form of rejection of the 0.5 level, and we do have, because of that, we do have a potential advanced pattern completing at this level as well, right? So if I draw in the triangles to show you how it looks like, right, we have this pattern forming. Oops. Right, so if price comes down towards the 103.45, we'll be looking for an opportunity to long the dollar yen as well. Okay, so if I go back to the H4 to show you the overview, okay, again, right, just based on one particular pair, we have multiple opportunities to trade the market. So again, just like to share with you guys and those who are very new in trading, all right, not to rush into any particular trade. Do not force yourself to start, you know, entering trades just because you cannot see anything in the market. There are many opportunities out there, right? And today we are just looking at, you know, just these few pairs, and we can spot so many opportunities already. All right, so again, let me then just, you know, just bring you to, let's say, euro dollar. Okay, but at some point in time, when things like this happen, all right, Okay. Later, okay, we have one request on gold, so later I'll look through gold, right? But I just want to share with you about things that a lot of traders who just start off, they always face this problem is that when they do not see any setups based on their strategy, they tend to play around with different time frame, going to 15 minutes, 30 minutes, or even 5 minutes to try to squeeze something out from the market, right? But I want to just share with you that it's not every day that you're going to find opportunities in the market. All right, so for example, in euro dollar, let's just say if you're looking for a pattern, right, and price is currently in a trend, right. So if I just go over to daily time frame, you can see euro dollar is still over on the daily time frame is still in a range, okay. But if you zoom into H4, the recent move itself is in a trend environment, right. So with that, if you adopt a range strategy, first thing is you're definitely going to lose a lot of money if you keep continuing, in a trend environment, keep applying a range environment strategy. You're definitely going to lose a lot of money. And second thing is, in a trend environment, by right, you shouldn't be able to spot any setup based on the range strategy, right? So a lot of times traders, when they cannot see anything, they start to play around with different time frames to squeeze something out. So what I want to share with you is, if you do not spot any potential setup, for example like this, then just avoid it. Right, skip and look out for another potential pairs that gives you some kind of valid setup. All right, but since we are on euro dollar, let me just finish this analysis on euro dollar, and then we go over to the gold. All right, one of you actually wanted me to share more on gold. Right, euro dollar again, because we have two kinds of strategy. All right, basically that means any kind of market environment, we do have some form of potential opportunities to take it. Okay, so just share with you, because it's a trending environment, we'll be using a trend strategy to tackle this. Right, first thing first, look at RSI. We have RSI printing a higher low, okay, but price printing a lower low. Okay, so first thing is, this caught my attention, the divergence. All right, second thing is, you can see price is forming a lower low. I mean, this is the initial point. It prints a low, it retraces, prints a lower high, and then price break the previous support over here, forming a new low. Right, so what we are interested on is, we are interested in this entire area on the previous low. Okay, so what we are looking out for is, if price pulls back towards this area, we'll be looking for opportunity to short the euro dollar. Okay, and again, we use Fibonacci tool quite a bit. So if I just pull in the retracement tool from the recent high over here to the recent low form, you can see that this area, right, this area between the previous support level, all right, confluence with a 50% Fibonacci. All right, so this is the area that we'll be looking out for if price comes back up, all right, towards this level at 1.112. We'll be looking for a short opportunity, expecting price to reject off this area. Okay, but before price move here, all right, there are two things. Again, you always plan out in terms of scenario. There's two things price can do. One is it goes up, all right, and it follows what we analyze. Second thing is price move just break lower, right? And since we have a divergence, okay, which is divergence is usually a counter trend strategy, right? It's showing that it's giving you an indication that price might start to turn, right? So if you drop onto a lower time frame on H4, right, what you can wait for is more confirmation. Basically means after this divergence, you see that price forms a double bottom. You can go in on a very aggressive buy, all right, expecting price to go up towards this retracement. You take profit off that trade and flip your position from a counter trend buy to an overall short trade, all right, on the higher time frame on H4 that we are looking out for. Okay, so again, you can see that just looking at this kind of charts and looking at just few pairs, you have many opportunities. All right, so let me go over to gold over here. Okay, so again, the same process that we always do. Look at the daily time frame, what is happening in the gold market first. Okay, what we see over here is that gold rallied, all right, it consolidated a bit, it rallied, consolidated a bit, and then it dipped. Right, the first thing you want to do is, in terms of gold commodities market, all right, we do not have much insight in terms of fundamental, because it's slightly different from the currency market. All right, currency market, we can look into the economic performance of the individual currency, but in terms of commodities, it's slightly different in terms of how the nature is going to play out. So first thing is if you want to understand what causes this move, right? There are a few things. All right. First is, of course, the risk environment. Is it because of financial uncertainty that causes sorry, it's actually the opposite. This dip in gold can be caused by risk-on environment. So basically, investors and traders pull their funds out of the precious metal market into riskier asset classes, right? For higher return. All this drop can be because of a dollar strength, right? Because your gold is against a US dollar, right? So you need to just go and find out on that. But basically, in terms of technical analysis, right? Let me just pull in my tool. All right, what you see over here is this previous support, all right, 1 time, 2 time, 3 time has been broken, okay? And what we are looking out for now is price on the daily time frame. Price has transitioned from a consolidation pattern to a trend market, all right, because price has broken that previous low. Now we have this high, all right, this low, and then a lower high and a lower low, all right? So once we have this established, it becomes a trend environment. Right. So if you're trading on daily time frame, so what you need to do is just simply wait for price. All right. Just pull in your fib. You can see there's a confluence as well. Okay. Which is pretty nice because the 618 golden ratio confluence with your previous structure. So what you need to do is wait for price, right, to rally back up. Retrace back up towards this retracement level at 61.8, 1307, before you take an opportunity to short the market lower. All right. And second thing, if you don't trade daily, all right, then what you do is you go down to a lower time frame or H4, say. Okay. Let's check if we have anything setting up. All right. So just a quick one. You can straight away see that we have a minor divergence in RSI over here. All right. So price move slightly lower, or if you look at this very, very objectively, it's actually a double bottom, and your RSI prints a higher low. Okay, so again, when you see all these things in divergence, it's indicating that it's showing sign of reversal. All right, it's not 100%, but it's of a certain probability that price is gonna start reversing. Okay, so there are again few key things that you can play out with. One is you go very aggressive in taking a counter trend entry. Basically, you buy over here, and you expect price to go higher. Right, so let me just pull in a 2. So if you're very aggressive, if you buy over here, okay, your stops will have to go below the previous low, right? And what we usually share is do not put exactly at the previous low, because this low can still act as a form of support, your last resort, right? Last form of support. So you want to put slightly below it, right? So you give some room for price to move around and potentially can still turn up. Okay, and your target can go all the way back up towards the 61.8 area that you are looking out for. Okay, so if you just quickly measure this kind of trade risk to reward ratio, you can see this kind of potential in terms of this trade idea can give you a potential return of 1:2.5. Okay, so your risk to reward is pretty decent, right? So again, not all traders are suited. Right, their style, not all traders have a style of trading counter trend. So you need to also understand, are you comfortable taking a counter trend trade? If you're not, then just simply wait for price to rally back up towards the 61.8 at 1307 before you take the trade to short the gold market. Right. So if I drop even to the lower towards the H1 time frame to see if there's anything. Oops. Okay, basically, if I go even on H1, all right, we don't really see much that's happening, right? Because price right now is in a bearish channel, right? So there's not much in terms of what's happening now, right? So when that happens, we basically don't force ourselves to squeeze something out of it. Okay, so in terms of gold, it's basically that 2 opportunities that I share with you. One is a counter trend because of that divergence. Right, let me just rescale everything. One is a counter trend because of that divergence over here, right? And one is a trend continuation if price rally back up towards this region to short the market, right? If you are going for counter trend, you might want to have more confirmation in terms of, let's say, if price break above this bearish channel, then you enter from a breakout targeting over here with stops below. You can do all those, all right? So basically, each of the strategies that you have, you need to have all these criteria very clear for yourself, okay, before you enter and take the particular trade. Okay, just to share with you some risks if you're trading gold and precious metal, basically commodities, is that the commodities like precious metal in gold and silver, they are quite responsive and reactive towards the risk environment in the market. Okay, simply means, right, when it's risk off, tendency is that monies and funds will flow into safer asset classes like gold and your precious metal, basically gold and silver. So your prices on gold and silver will rally if there's a risk-off environment. All right, risk-off environment, simply put, is like, for example, there are much uncertainty in the financial market, or if there's a war that is going to break out. Okay, so your precious metal is going to rally. But if everything is pretty safe in the financial market, there's much certainty, economy is good, most of the time funds will flow out from your precious metal towards riskier asset, like for example, in terms of currency, it's your Aussie and Kiwi, because they offer a higher yield. Okay, so investors tends to invest more into those kind of asset classes. Right, so hopefully this gives you a better picture. Again, do not take this as trade signals, but take the thought process that I shared with you guys, and then go and absorb and digest a little bit and apply onto your own trading itself. All right, so do we have any other questions over here? How to draw this trend line? Okay, yes, if you are in our master classes, you'll be taught how to draw the trend lines and triangle. Basically, every technical analysis that you see in this webinar, we use it and we'll teach you how to use it. Okay, to spot trend, we use. Okay, yes. So we have one question asking to spot trend, we use day one H4 and H1. Yes, all right. Basically, because of our trading time frame is mainly on H4 and H1. That's why we take daily to give us an overall trend environment. Right, but if let's say you are an intraday trader, that means you only trade on 15-minute, right? That's your trading time frame. Then it's quite not relevant to you to look at daily. Okay, so if you're trading on 15-minute, then maybe H1 and H4 would be more relevant to show you an overall picture. Okay, so this one, again, do not take it as if you need to follow everything, but it really suits your. You need to find something that suits your personality. All right, so it's a good question. All right, so that's why you need to clarify if it applies to you as well, and then understand the reason why we have all this thought process. Right, silver and gold. Okay, we have one question asking, is silver gonna follow gold? All right, the answer to that is yes, but it's not all the time gonna be 100% the same kind of movement. All right, but I'll just quickly share with you. Let's go to the daily. Right, so this is what happening on gold daily. All right, you can see price rally, consolidate, and then it drops. Right, so if I bring you to the silver chart, the pattern of it looks similar, right? But the scale of movement is not going to be exactly the same. You can see it rallied, it consolidated, and then it broke. Okay, so again, since we're on this topic, I would like to touch a little bit on managing your risk exposure. Okay, so if you are trading on gold, meaning you have a setup on gold, just now we analyzed, all right? Right, we are looking to sell if price rally back towards 1307, right? And if you look at silver market, okay, your setup will be very similar because price broke this previous structure over here, previous support, and then if I draw in my fib, you see a confluence as well coming in. So if you decide to enter on that sell trade on gold, right, and you risk 2%, basically your maximum risk per trade on gold to sell it, and then you come over to silver chart and you look at this, and then you decide, hey, we have another setup to sell silver, and then you also use a maximum of 2%. That means your maximum allowed risk to take the trade, let's say, is 2%, and you enter silver trade on 2% also. Okay, and because these two markets, basically gold and silver, are very closely related, all right, and you can see they move almost similar in terms of the pattern. All right, price, the movement is almost similar. Okay, you're literally exposing yourself to a total of 4% risk. Right, so that's a little bit in terms of managing risk, your risk management. So you need to be aware of this. All right, so if you're trading in gold and also looking at silver, there are two scenarios. All right, this one I shared with some of them as well earlier in the webinar. Is that first way you can deal with it is you reduce your risk on the two trades, meaning gold, instead of 2% risk per trade, you take 1%, and then silver you also put in 1%. So what you eventually did there, right, is that your total risk exposure on the precious metal become 2%, which is your initial maximum risk that you're ready to take, right? That's one method. The second method is, instead of taking both, you select one that is of a better opportunity. All right. So since we're on this, I'll share with you how you decide on that. All right. Or basically how we decide on that, and you can take reference on that. Okay. So let's take a look at silver. If I short over here at this structure and I just simply put my stop loss slightly above the previous high, my target at the recent low over here. Right, you look at this risk to reward. Okay, it's less than 1:1. Right, but if I go over to gold and I apply the same method, okay, I short over here, my stop slightly above the previous high and my target at the previous low. Okay, you can see the risk to reward on gold is positive, meaning it's risking 1%, I can potentially get back 1.46. All right, so my risk to reward is 1:1.46. So simply by looking at this two kind of setup, okay, I can then decide which one I want to take. All right, so if you look at this in terms of risk to reward, definitely we'll take the gold and then skip the silver. All right, so that's another method that you can use to manage your risk. All right, hope that's clear. Okay. Okay, we have one question. All right, just like gold, what about trading oil? Okay, precious metal and oil is slightly different. And again, what is going to move your oil market? You need to take note of is definitely the decisions coming from OPEC. All right, because they directly control the production of oil. All right, and based on the concept of supply and demand, it's going to move your market. All right, so again, if you look at daily time frame, oil is currently retesting the previous high. It didn't successfully break it, and then some form of rejection is showing up there as well. Okay, so the movement of oil, again, we do not have much fundamental data to share with you guys because it's unlike currencies. There's no country to actually analyze the performance of oil. But how to follow through oil is that you need to take note of the development of OPEC, right? And of course, the data coming in from oil inventories. Okay, because of supply and demand is definitely going to impact oil. And of course, you are more sophisticated and more advanced, all right? You also need to take into seasonality of oil because, you know, in Singapore, you only have summer, basically whole year round. But in US or in the European countries, during winter, right, the consumption of oil might increase, all right, because of the cold weather. And because of the consumption of oil being increased, all right, the demand increases as well, and that will naturally push prices higher as well, right? So this is a little bit in terms of the seasonality when you're trading commodities. So it's not as easy as you know what most of you would understand. You know, just look at chart and then make a decision, right? Definitely you can make money based on looking at technical chart, right? But if you want to reach another level of really understanding all this movement, you know, what is the underlying forces behind these commodities, these currencies, you need to go further, right, beyond just looking at technical charts. Okay, but of course, technical charts, we do not discount the usefulness of it, because it does give us that kind of precision area that we want to look out to take a trade, and it allows us very clear levels in which we want to get out as well. Okay, so hopefully that answer your question in terms of oil. Oil and precious metal do not move in tandem, all right? Because they are separate in a way that the precious metal is one asset classes, is one commodity. Crude oil is another commodity by itself. All right. Do we have any other questions from the room or from Facebook? All right. If not, basically we covered a few. All right, I'm going to show you this chart again for those who want to take reference. You can quickly take a screenshot on this screen. Basically, just want to again remind everyone, this is not to be taken as a signal. It's purely levels, key levels that we are looking out for. Okay, and do not just take it on surface level, okay, because we might not be taking all of this, and we always monitor the market in terms of the development of the fundamental and sentiment aspect for everyone. All right. Hope you guys at least learn something. All right, out of today. Either from JT's sharing in fundamental and sentiment. If not, is on the technical session. Okay. If you cannot remember anything as of today, the most important one that you need to take away is always manage your risk and follow your trade plan. All right. So basically, do not put all in and then take one trade and hope that that trade becomes a profitable trade. All right, so with that, I think JT mentioned a little bit about central bank reports as well. Okay, so before we end off today's session, all right, what we want to share with you is there are some free resources over here that we do on a weekly basis as well. Right, so if you just simply go over to our Facebook page, most of our notification will be posting on this. All right, so if you do not want to miss out on any of the events, future free resources that we have, what you need to do is go over to our page, like it. All right, and there's this option over here. You see over here, notification. You can actually turn on for all notification. All right, so what you do is you click off and then you click all on. All right, so in the event in the future when we post any new updates in terms of we have community events, we have a webinar like this, we have articles that's released, you get notified on Facebook as well. Okay, so what we usually do is we post a weekly article. Let me just scroll, my com is a little bit slow today. If you scroll low or below, all right, basically what you see is that we post blog posts, articles as well. So that one is released on a weekly basis, right? So we share with you a very quick outlook in terms of the overall financial market, in terms of equities, in terms of commodities, and some of the potential setups for the particular week itself, right? We usually release on Sunday. Okay, so you can actually check and hopefully that kind of report will help you, all right? So this is the one, right, that we wrote on it, all right? And we also release on a weekly video analysis over here on YouTube, okay? So if you want, you can also subscribe to our channel so that whenever we release something, you'll be notified on the latest update as well, all right? And of course, since we are sharing all this, hopefully you can also give us a review on Facebook, right? JT just now shared earlier in the session as well. Do give us your review on Facebook, whether you like it. Give us some comments as well. Which part that you enjoy. How can we improve? All right. So in the future, when we have future webinars like this, all right, we know exactly where we need to focus on to help you in your trading, and which area we can improve on. All right, and the last thing I want to just quickly share with you guys is that we have 2 master classes for October. All right, this is for traders who are in Singapore, because these classes are actually conducted physically in a seminar room. But for those who are overseas, all right, we'll be having our online programs very soon. All right, by the end of this year, you actually be able to join our online program. But for those who are in Singapore, we do have our last 2 master classes in October. All right, basically on Saturday, 22nd of October, which we have the advanced technical setup, advanced technical analysis masterclass, and on the 29th we have the fundamental analysis masterclass. All right, we are currently charging at 197 Singapore dollar. All right, and in November itself, we'll be raising it to $247. All right, so if you are interested, all right, we would like to urge you guys to take this opportunity when we still have that promotion of 197. All right, the next thing I want to share with you is, all right, just now I shared with you in terms of blog posts. All right, it's actually on our website, alphaplay.com.sg. All right, so if you just go over under this segment, okay, the internet is slightly slow. Over this segment on blog, all right, if you click into it, that's where you can have access to all our weekly analysis. All right, sometimes when there's special events, for example, last September, all right, we have a discussion on whether the Fed will increase rate. Okay, so during those special events, we also release special article as well. And to help you, to give you a different perspective, right? September FOMC special report, this is the one that I'm referring to. So this weekly market analysis, again, is not to be taken as a signal for you to trade the market, but it's to give you insights and give you a different perspective of how we view the market, all right? So some of you might use it as complementary of your own trading system. Some of you might use it as a guide. all right, to give you an overall picture of how the fundamental is doing, what are some of the things that you need to take note of for the particular week. Of course, we have another new portal that we recently just started, but it's not launched publicly yet. All right, so for you guys who are in this webinar, it will be the first time that we shared this with you. alphaplay.com.sg/students. This is a membership portal. So basically, what we do over here is this is a membership portal. All right, so it's a paid member. All right, so what we do is we have this FX Edge report on a weekly basis. All right, so this one is if you go over here, under this products tab, you go under FX Edge report, you'll be able to find out a little bit more about what this report is about. Okay, it's a weekly report that we shared out, right, in terms of what is the economic performance, what's the fundamental strength index, our directional bias, the COT report, everything will be in, right? And if you would like to find out more, there's a sample report that you can download as well. This report is actually last week report, so you can actually click and download to it, right? And of course, you have a daily watch list. This one is mainly done by me on a daily basis. Right, so what we do is I will send you out on an intraday basis what are some of the key levels that I'm looking out for, all right, so that you, again, it's not a signal service, but it's really just key levels that I'm watching out, and then you can also put those key levels into your watch list, and then when the price hit those level, I'll be notifying you, and then to share with you whether I take the trade or not. All right, so it's more like just sharing with you guys some of the things that I am personally watching. To offer you guys is that we have a 1-month trial for all this service that I just shared with you for just $1. Okay, so what you need to do is you just click under this tab, become a member. All right, you can decide which one you want, but basically all of this has a 1-month trial for just $1. All right, so you can actually sign up, test us out for that 1 month, see whether this service helps you in your trading. Does it complement you? Does it give you more insights into the financial Forex market? Okay, if it is, then you like it, then you can continue your subscription. If not, you can cancel it. Right, and what we want to share with you, because you guys are in the webinar first time, is that we have an affiliate program for this as well, and we are giving off 50% commission for you guys. All right, so the earlier you join, all right, and start sharing, if you benefit from it, all right, and you really find value in it, and you start sharing with your friends, you can actually get 50% for the commission. So we pay out 50% to you. Okay, so of course, if you join later, then your friends might have already subscribed to it. Then you might lose out in terms of that. Okay, so that's why we want to share firsthand with you guys who are in this webinar. All right, so of course, all these signal lists that you see, the report that you see, that JT shared and earlier in the PowerPoint, is all included in all this. Right, and then after that, after this webinar, we'll be uploading the recent and latest central bank report on our Facebook group as well. All right, so that one you can go over later on our Facebook page, and download it. Okay, so the central bank analysis report, basically what we do is whenever there's a central bank announcement and decision that's being released, we analyze and look through it, and then we summarize the key points for you guys. And then it helps you in terms of looking out understanding what the central banks are looking out for. Is their bias more bullish or more bearish? Are they hawkish or dovish? All right, that gives you a quick guide in terms of what is the central bank outlook in terms of the economy. All right. Okay, we have one question. Is it in SGD or USD? Okay, to answer that question, the membership prices are priced in US dollar. All right, because we are going to expand this service not only to the Singapore market, but to anyone overseas. Okay, so it's actually currently priced in US dollar. All right, any other questions that you guys have? All right, in terms of charts or anything that's not clear, or any market you want me to walk through? All good. All right. Okay. So if everyone's good, we have a great session today. All right. A whole full 2-hour session with you guys. All right. Again, hopefully you guys pick at least something. Some of you who are new might be overloaded with information, especially when we talk about fundamental, sentiment, and technical, you might get lost and such. Again, just to remind you that these videos, these webinars are all recorded. All right, so feel free to revisit them and recap a little bit on what are shared today, and hopefully, you when you revisit and review it, you'll be able to learn more stuff. All right, so with that, I'd like to thank everyone for this session. All right, for giving us the opportunity to share with you guys more about the insights as well. And without that, without any further question, all right, we'll end off this webinar session here. All right, and for our students, we'll talk to you soon. And all right, yeah, okay, good. Other than that, all right, for those who have any other further questions, feel free to, Facebook message us on our pages, drop any comments, any questions that you need to clarify. You also can find our email, all right? Feel free to email any questions that you have to us as well. Okay, we have a question. To sign up for Saturday course, go over to our website, alphaplay.com.sg. All right, you can find the link right at our landing page. All right, so for this coming Saturday technical analysis masterclass, we do have about 12 seats available left. All right, so if you are interested, do sign up for it ASAP, because once it's full, the room cannot take any more intakes. We'll close it. Okay, so under this over here, right, upcoming events, you can just subscribe to enroll for this Saturday course. All right, so you just click sign up, and then it's pretty easy to follow the process. All right, so with that, I'll end this webinar here. We have a great session today. We'll talk to you in the future events that we have. All right, and future session. Okay, so good night, everybody, and trade, and have a good trading week. This week, again, just to recap, always manage your risks. We have many events for this particular week, all right? So ensure that you are protected with your capital, okay? So with that, I'll talk to you soon.
Okay.